Well, when I look at your portfolio, what would I find? What's in it? Because we're going to talk about whether you should have crypto in your portfolio.
I think I have a more reasonable portfolio than you, Ryan. I, of course, am wearing the sweater with the white drawstrings hanging from it.
Very nice. Very nice. Very conservative.
Think I'm more of a traditional conservative. 2024 it is. I think I'm more of a conservative investor.
Okay.
You can see I'm sitting at 7% on Bitcoin, 5 ETH, 2% altcoins, and the rest I dump in equities.
But you have some Bitcoin in the portfolio.
Yeah.
And there's a reason for that.
Yeah. Well, yeah, it's 7%, sure.
Okay.
And again, we're going to get into why I have that at 7%, and hopefully into why you have it at. Let's talk about your little pie chart, because that's much more interesting to me.
Yeah, where I'm at.
4% Bitcoin.
I am, pretty bullish, I suppose.
I'd say so.
You know, I trade around that. It's not just all Bitcoin, and I don't know if 54% is perfectly accurate, but definitely overweight. You know, most of my money is in crypto. I've been in this space for a while. I take some shots in other areas. Obviously, you've got to have, a good quarter of your portfolio allocated to weed stocks.
Yeah.
Generally speaking,
I followed you down that path, Ryan, about 2 years, and we're still waiting. We're still waiting for what are we waiting for exactly?
The federal legalization, the pie in the sky. Yeah, okay. Coming soon.
Coming soon, I hope.
I think there's some catalyst there, but this is not a weed stocks show, though. Again, I think there's an interesting setup. That said, I've thought that for some time. Hasn't yet played out. But yeah, I'm a bit more overweight, I suppose, when it comes to crypto. That said, what is the allocation that, if there are recommendations being made by authorities in the space, I think you're quite the authority in the space, so maybe the recommendation is 7%. But let's ignore my portfolio. What do others say? Because I haven't found anybody yet, Mike.
Yeah.
That says you shouldn't have any.
No.
And maybe it's just because everybody wants to sell it, or the ETFs charge fees. I don't know, but there don't seem to be that many people that are talking about it going to zero anymore.
Well, anti-crypto people don't write about crypto.
Good point.
So,
good point.
From what I could tell.
What are the pro-crypto people saying?
Well, that's what we're looking at right now. It seems like most people, and I've looked through over the last couple of years, a few dozen different recommended allocations, and they seem to be between 1 and 6 and 7%.
Okay, surprisingly, no one's at 50.
No, well, you're at 50. I guess we have to add you to the list now.
Well, it's not a recommendation.
We could replace you with Ray Dalio here. So, BlackRock, 28%. This was made at a closed door event. I don't know who said it, but it made headlines when it did come out a couple
aggressive.
Weeks ago.
I love it.
Very aggressive.
I love it.
ARK.
Oh, of course.
Kathy Wood, 19.4, of course.
She's aggressive.
Yeah. Grayscale, 5%. And, of course, these people aren't biased at all. And Ray, 1 to 2, which is on the low end.
Okay.
So what I'd like to talk about next, Ryan, is what happens to your portfolio when we're talking about risk when you add Bitcoin to it. And how does that risk change as you increase your Bitcoin allocation? So the next slide, this is from a Morningstar report.
Okay.
The founder of which lives about a block south of me in Lincoln Park right here in Chicago.
Oh, wow.
We go out for coffee every once in a while.
That's not a humble brag.
Really.
No, very nice. Okay.
He tore down half the community.
You live above his garage, right?
I live above his garage.
Yeah.
It's a crypto residency project. I won a contest for 3 participants in it. So we can see here the portfolio returns going back 9 years. If you were to add 1% Bitcoin allocation all the way down to 25. So this is in addition. This is supplementing a traditional 60-40 portfolio. So you're kind of shifting the allocations to include Bitcoin.
Okay. Stocks, bonds, Bitcoin.
Right.
Is what we're looking at.
And so we're just looking at Sharpe ratio, some beta, just some basic risk here. They're pretty conservative. They're definitely not pro-crypto or pro-Bitcoin, so I don't know if that went in here. They don't really cover Bitcoin at all. This is just their suggestions. And I thought we would start off at a legit place before we go to my place.
So what stands out to me here is that the bond allocation is where you get your max drawdown, right? I mean, that's what crushed you. Obviously, we had a historic moment in the bond market in terms of the sell-off once we started the rate hike cycle out of the Fed. But if I look at 60-40, that's no Bitcoin. Max drawdown, 23.8%. You add Bitcoin, doesn't really change all that much.
We're getting rid of the equity for some reason. I don't know why they wouldn't, whatever. So we're reducing equity. We're just shifting the equity to Bitcoin.
Okay, but you got to have your bonds.
I really don't like bonds.
Okay, well, we won't get into that, but
they're just, I mean, it's supposed to be a risk-averse security, asset class. I mean, S&P's up how much in the last year? How much are bonds down? Yeah. I mean, the real risk is not participating in the equity market.
But the U.S. government needs to borrow money.
I know.
So,
that's a different show.
All right, let's talk about something a little bit more exciting, because I'm not messing around with a 5% allocation, and I don't have any bonds in my portfolio either, Mike. So what does this really do to the upside? Because I don't think, I mean, it's kind of hard to argue here. Obviously, there's a lot of volatility in crypto at times. There's a lot of volatility in small cap stocks. There's a lot of volatility in crude oil. There's volatility, there's risk in markets to the downside.
And volatility is not bad.
It's not. No, not at all.
It's in relation to your overall portfolio.
And
volatility
adding
is good.
it here, it seems, adding crypto gives you the upside. It seems like that opportunity, the risk is worth the reward, I suppose.
Well, Ryan, this wasn't enough for me. Morningstar's report didn't satisfy me.
Yeah, it wouldn't be enough for me either.
So I spent some time today, and I went through, as we can see, and I figured out the returns over 1, 5, and 7 years of a traditional portfolio, kind of like Morningstar mentioned, and I added 1, 5, and 20% Bitcoin allocation. So
I like that 20% Bitcoin allocation on a 7-year basis.
Yeah. By the way, who does a 60-40 portfolio in 2024? Why is that the model? Maybe
That's a great question.
For a 95-year-old man?
I don't think it is. I don't think it is the model.
Yeah, but I mean, that's what they use.
I want a multi-strategy approach. I'm selling option premium. I'm trading futures, crude oil futures, obviously. I got weed stocks. I got Bitcoin.
You don't have a lot of bonds.
60-40 is dead, man.
60-40 is dead. It's some arbitrary number made up when people live to be 50 years old.
Fair. I digress. What are we looking at?
So I kept the bonds in because it makes the performance look better in the long run for Bitcoin. So as we can see, traditional 60-40, 1 year, you got a 14% return. This is from today going back exactly 365 days. If you had a 20% Bitcoin allocation, your total returns would be 41%. So that's pretty dramatic. Okay. And we can just look across the board. 5-year, obviously, Bitcoin was a bit of a lull over the last few years up until the rally.
Yeah. But still, that whole winter period.
Still outperformed. 7-year outperformed. And there's outperformance in every single one of these. So in the long run, if it isn't a completely worthless asset class, which Bitcoin isn't, volatility helps a portfolio, and I think these numbers show it.
In your opinion, then, and I think I know where you stand here, is this more of just a vehicle that you buy and hold? It is that digital gold. That's how you think about it. Like, all right, the numbers make sense. Yeah. And if I hold these assets, you could maybe, look, in fairness, you might be able to make the same argument over a longer time period that you need a 60-40 portfolio to be supplemented with some AI stocks, NVIDIA. You start to take different asset classes, right? I think there's a lot of ways you can break it down here. So in fairness, I mean, there are other things, there's a lot of ways that you can mix this up, but why would you consider Bitcoin
as opposed to AI
versus
stocks?
You need 15% Apple stock.
Yeah, well, I mean, this is just a benchmark, because to answer the question, Bitcoin isn't an equity. Everything you said would fall under the equity class.
I agree.
Overweight things, but Bitcoin is its own beast. And why Bitcoin? Right? So Bitcoin is nothing on its own. Bitcoin, in my opinion, is a hedge against what's happening in the world. And I think that's going to parlay us beautifully into the next slide.
Oh, hell of a segue.
So why do you need Bitcoin?
Yeah.
Inflation hedge, currency devaluation. I had 5 things on this, but it looks sloppy, so I cut it down to the 2 most important ones.
These are the 2 most important in your opinion?
Yes, I would say so. What do you think? What am I missing there? What are we hedging against? And we're going to get into the Doomsday scenario in the next slide. But in your opinion, what are we hedging against when we're talking Bitcoin? When you buy Bitcoin, and I'm not talking about, you're asking before investing versus trading. I'm not talking about your trading account. I'm talking about the long-term performance of Bitcoin. Yeah. Why do you believe in it? What do you not believe in that makes you buy Bitcoin? That's the question.
I wouldn't be as bullish on Bitcoin if there was, very clear signs that things were changing in the U.S. in terms of kind of our fiscal position,
Right.
monetary policy from kind of developed market central banks. You know, if you saw that we were getting things in order and we were looking at how do we not even reduce it, right? I'm not making
If
an
there was
argument for that.
awareness around it.
But how do we maybe become a bit more responsible in terms of just, you know, look at what's happened in the markets with asset prices, with crypto especially, and then just look at the increase in debt, look at the rate of change of that increase in debt. And so, you know, that's what would get me to be less bullish, maybe even bearish, if I didn't think that this was a hedge to that system in some sense. And it doesn't mean that it's going to work out or that you need it. And again, obviously I'm super aggressive short term with a pretty big allocation there. But I think like the reason why you'd want to have some of this in your portfolio is to ultimately hedge currency debasement. To an extent, you might argue that these are the same thing. You could take a lot of these markets where you've seen, you know, the most devalued currencies, a lot of these different countries, and just price any of their other assets, you know, their stocks in Venezuela. You know, look at the equity market there, priced, you know, in the local currency, and you're going to see some of the best performing assets, you know, on the board in those currency terms. And so I think that's what this is ultimately a hedge against, right?
Against the system. Systemic financial, monetary.
Yeah, I've heard this described, I don't know if it was Michael Saylor or whoever it was, might have been him, but described as like a life raft, you know? It's the best risk reward on the board if you think everything's going to go up in dollar terms because dollars are going to continuously be debased. Whether that happens or not, that's, I think, the reason. That's why I would have this, right?
Let me just say something real quick.
Yeah.
I think our system, I think the Fed, I think it's our democracy as a whole is working as it should be working. But politicians and policymakers respond to the public. And there is no awareness or concern about these problems that we're talking about. Nobody's worried about it. Do you know anybody of your friends that have talked about this outside of Tasty?
If I had friends, they probably wouldn't be talking about this.
Oh, I'm so sorry. I forgot.
But no, not even anyone at Tasty is talking about this.
Yeah.
Come to work and nobody talks to me about, you know, how irresponsible our politicians are. The fiscal situation we're in, Mike.
It's just hot button, very emotional issues. That's what dominates the media today.
Sure.
Not structural problems, which is what we have. And that's what I'm hedging against. I'm hedging against an unaware public.
The ultimate collapse?
Yeah. Well, you know what? Let's go to the next slide.
Walk me through this, because when I first saw this, obviously I get a sneak peek at the numbers, just like the Fed. Do you think the Fed gets a sneak peek at the numbers like they saw inflation ahead of time, or they're waiting, just clicking refresh on their computer like us? No way.
I looked it up.
Do you remember when they were
refresh? Damn it!
And
they don't change their opinion. We talked about that. They do not change their opinion. It's set in stone last night. Whatever the CPI was today, the Fed is going to come out and say it in the afternoon.
I don't know.
They're waiting in line to get coffee. I don't know why they couldn't send the email off.
Weren't they trading ahead of policy announcements, like loading up on like short? We're going to hike rates.
Yeah.
And before we do, make sure everybody's got in their massive short E-mini position.
Yeah. Well, I'm on that newsletter. I don't think you are. You have to be connected to be on that one.
I'm sorry. I'm getting us off track. We're running out of time. This is why you are long Bitcoin?
This is a possible scenario. This is not a likely and unlikely scenario that could potentially play out.
What do you think the probability of this scenario is?
5%.
5?
Yeah.
All right. Walk me through it, please.
So, widespread AI adoption, right? And don't think nobody
inching closer, or are we running like 100 miles an hour at it right now?
We're going a millimeter at a time.
Okay, you don't think that we're anywhere near?
That you or me or anybody else understands AI because it evolves itself. We cannot fathom what it's going to be.
Okay,
but we know it's going to be big. How big? Bigger than you and me anticipate.
All right, permeates our daily lives. Widespread AI adoption, which results in mass unemployment. So I've heard the other argument here that it would result in significant productivity increases. But let's say that
on the corporate level.
But the worst case scenario is no human beings are relevant anymore.
For the most part.
To that
some
production.
Some of them are.
Okay.
But for the most part, no. Because AI is beautiful. It's incredibly efficient. And where it's going frightens me.
Okay.
So we have widespread adoption, right? So that is going to lead to the government funding our universal needs. So there we have mass unemployment, so we're going to have to print money, right? So we print money that devalues the currency. And then we're going to lose trust in the government. We're going to lose trust in our monetary policy because our currency isn't worth anything. And then people are going to, and I'm not talking about just 10, 20%. Everybody in the world is going to start thinking about Bitcoin more, right?
Sure.
They're going to start investing in Bitcoin.
Sure.
And the government is going to realize they're losing control and they're going to shut it down. But guess what? They don't have their money in the US dollar. They have their money in Bitcoin because they know it can't be printed. So they're going to try to intervene, but they can't because it's decentralized. What are they going to do, right? I don't know. Maybe there will be some different VPN version. I don't know. In the future to access certain things. So after that, we have chaos, of course.
Obviously.
And then the chaos is a big, the anarchy symbol. I don't know what that actually entails, but it's going to result in mass adoption of Bitcoin. And this might happen not in our lifetime, Ryan, but I think this is a potential course of action for the world.
I don't know. I think like there was the Bitcoin trade happened somewhere along these lines previously, prior to the chaos thing. I'm swapping my Bitcoin for seeds, weapons, guns. I don't know. This is a very interesting.
We're going to stockpile it.
This is a very interesting theory, Mike.
Well, when this day does come,
but the AI will have anticipated all of this anyways, so it won't
I have
matter.
a boat at Belmont Harbor. Since it is chaos that I'm going to steal, it's picked off, and I have an island I'm going to sail to. And I have about 9 people on it. I have 2 more spots. So you and your wife are more than welcome to join me for a price, of course. But
obviously,
I just want to let you know.
Only in Bitcoin.
Only in Bitcoin or
Beautiful.
seed.
Fair enough, Mike. I'm going to bring us back to planet Earth really
Right.
quickly. And just mention that if anyone wants any more of this beautiful content, I do like the theory, but Mike puts out a ton of good work. tastycrypto.com. Get on the email newsletter.
It's not all conspiracy theories, too.
No, I think this is a pretty accurate forecast of what happens next. It's hard to call this a conspiracy theory. But, when you do look at, just to wrap things up, when you do look at what's going on, I think, again, there is, just going off of the numbers, a pretty strong case that you want a little bit of this as an asset in your portfolio for diversification purposes. There is a view that there's a lot of risk and a lot of downside volatility, and that's true at times. We've seen this cycle play out a few times. It's obviously a nascent asset. It's a very small market cap relative to others that you can invest in. So you get the 70, 80% drawdowns at times, but that precedes often, that 300, 400% increase over a long enough period of time. If you've owned this, you've done pretty well. We'll see if that continues. But I think, again, when you look at the numbers and you look at, here's how much money you lost being invested in U.S. Treasury bonds, and you did not increase risk by adding Bitcoin. You actually decreased risk by removing treasuries. There's a case to have, Bitcoin as a small percentage in the portfolio because of the potential upside gains.
Yeah.
And I think arguably at times the uncorrelated nature of the asset class, though, we'll see whether that continues. But
I go back to the simple, let's say Bitcoin's at 70,000 today.
Yeah.
Say there's a 50% chance it drops to 20,000 in the next 5 years, and a 50% chance it goes to 300, 400,000. That's a good trade.
Yeah, I think, again, getting back to dollar debasement, if you think all this continues, what's the best risk reward on the board? Maybe it's NVIDIA, maybe it's Apple, maybe it's gold, maybe it's Bitcoin. But I think you want to have a little bit of all of them.
But even if none of this happens, even if everything plays out beautifully on the spending level and all the currency devaluation, the Bitcoin could still have value. It rose 15 years ago, 10 years ago. No. It's not always in response to what's going on with our government.
And you definitely want to have it after the chaos period.
Absolutely.
All right. Well, we'll leave it at that. That's the Tasty Crypto Show. He, of course, is Mad Mike. I'm Ryan Grace. We'll be back next Monday. Until then, get on the email newsletter list, tastycrypto.com. Sign up for Mad Mike's Crypto Poetry, and we'll be back next week. Until then, thanks for watching. Peace.